Jinesh, good evening and welcome to the ET Money Show. And we will definitely dive into details when it comes to an investment portfolio. But then let's start with the budget expectations. How are you analyzing the budget this year, and what all can be expected? What are the announcements that you want to hear?
Yeah, hi, good evening. I think for us, budget is more of accounting treatment in terms of revenues, expenditure, balance sheet, how the fiscal deficit will move, how the current account deficit is shaping up. So I think for us, it is more about taking call on how the balance sheet of the government is shaping up. I think under this government, if you really see, the government doesn't require only budget day to announce any policy measures, and they have been announcing every now and then. And the more important part is the implementation and the execution of those policies. So I think from budget point of view, I only hope that no negative comes, and so no negative is good for the market. So no negative is positive, I would say.
All right, no negative is positive, but then let's focus on the positive that you want to hear, because Jinesh, we also know this is the last full-fledged budget before the general elections, and obviously the government will try and restrict itself. It looks like so far that we won't be hearing too many populist reform announcements. But when we talk about positive announcements, what according to you could be those announcements, or you would want to hear those kind of announcements?
I think more important would be to ensure that there is a continuity in terms of reform agenda. There is a continuity in terms of capex story growth, and we don't want a budget which tilts towards populist kind of a measures because of the upcoming election. And we don't think that would happen. But I think the more important than the positives would be negatives. So let's say if the budget is more populist in nature, then I think there would be some setback. However, continuing of the reform, continuing of this infrastructure-led growth story, I think should be seen as positive, I would say.
Let's talk about FPIs inflows, which has been very volatile, and in fact, we've seen a lot of selling now happening since a few quarters. And do you think encouraging the FPI inflows could be on the government's radar, considering that China is reopening and the premium tag that India had might just fade away? Do you think a specific focus should be given over here, or you think the DIIs are capable enough to take care of the inflows and keep the market on a positive territory?
No, I don't think when budget is made, people look at the market and give market that importance. It is more about understanding how the reform story will take place and how the fiscal deficit path will be done by the government. So I think anything positive from FPI point of view will be positive for the market. But having said that, if you really see last 2-3 years, even during COVID, you had record FDI flows coming into the market, which is more strategic money and more long-term money in that sense. So I think you are right that FIIs have been continuous selling from the Indian markets, and we would require them at some point of time if we need further growth, because that is how companies can raise capital. There are QIPs which happen, and hence you require both sides of the market, which is FII and DII. But my feeling is, I mean, frankly, I'm not privy to anything. So anything positive from that angle will be taken very positively from market point of view. However, there is no major expectations at least from our point of view.
Jinesh, talking about announcements like, giving a push to the export sector, controlling the fiscal deficit, PLI schemes, and also divestment that we cannot miss. Do you think any announcement on these lines would impress the market, or the market is actually anticipating a crucial announcement on these lines?
No, again, if I may say that already these policies are in place. I think just continuing those policies and let's say giving some more fillip to these policies will be more important. So, for example, on the PLI side, if they increase number of sectors or they increase the budget allocation, I think that would be construed positively. So, on the capex side, if they continue the growth momentum, I think that would be construed positively. So I think all in all, I would say already a lot of measures, lot of reforms have been taken by the government over the last 4 5 years. It is just the continuity which is more important, which leads to good implementation and execution of these policies. So I think more, I would be happy if there is a continuation in the growth path.
Jinesh, now let's focus on the market movement, and in fact, the coming quarters would be very crucial for corporate earnings. I want to know from you, what are the sectors that you are really worried about, and the sectors that even the market is looking for in the coming quarters in terms of results?
Yeah, given the global backdrop where US is moving into mild recession, Europe is slow, China is already they have reopened from the zero COVID policy, but generally speaking, from a longer term trajectory, it is also going into a slow growth mode as compared to what they used to do 5 6 years back. So keeping that in mind, I think clearly export related stories, more on the manufacturing side exports, I think that is where we are slightly worried. So for example, the textile sector or the bulk chemical sector, which had done very well over last 1.5 2 years because of the bunch up of demand and also global supply chain issue which led to bulk chemical prices going up, I think those areas will see pockets of business weakness. Already in the numbers which have come, you are already witnessing that happening, that because of the global growth slowdown, you will see exports getting hit in some form or the other, and that is more on the manufacturing side, not on the service export side. So that is where we are more cautious, I would say.
Jinesh, now talking about an investor's investment portfolio strategy, obviously when you talk about investments, we are looking at a longer term duration. But then considering the kind of volatility we saw in 2022 and now in 2023, what could be an ideal asset allocation strategy? I know a lot depends on your financial goals and the kind of risk appetite you would have as an investor, but how crucial it is to also consider asset classes like gold and real estate, and in fact fixed income also, if you want to diversify, keeping 2023 in mind. I know you need a longer time horizon and need to be invested and in a disciplined way, but then an ideal asset allocation, keeping all these things in mind.
I think ideal asset allocation, keeping all the global backdrop and the slowdown in mind, plus the volatility around asset prices, I think out of 100 rupees, I think 20 should be in gold, 30 40 should be in fixed income, and balance should be in equity. That is what I would say, given the given next 12 months, which are going to be a very very interesting and also volatile 12 months, I would say.
Now, during these tough times, where the market is typically dependent a lot on the global factors, not that we are not strong on a domestic front, but then we also see an impact of the global triggers. How important it is for you to sit with your team of fund managers and, have strategies that could beat the volatility? What are the things that you as an AMC are focusing on?
I think the best what we can do while keeping in mind many factors which impact the different sectors and different companies very differently. I think the way we have articulated our philosophy over last 13 14 years is clearly two three key things which we keep in mind while investing. First and foremost is the corporate governance of the company. The idea is not to go wrong in that. Second is look for companies which are in scalable sectors and run by strong managements. So execution on ground is really important than the storytelling. Eventually, markets are slaves to earnings growth, and hence the businesses should compound at a reasonable pace and should be doing better than the industry averages. So either you buy leaders or you buy probable leaders in the space, and ultimately everything boils down to growth, ROE, and cash flows. And we are looking into company on a granular basis. We are looking at sectors on a granular basis to ensure that whatever companies you choose, 1 2 3 companies per sector, I think they have all these characteristics to ensure that there are no major accidents on our long-term growth trajectory. And as businesses or as business managers, they should be in a position to understand different cycles pretty strongly and have their strategies in place. So that is how we look into bottom up stock picking and with long term orientation.
Jinesh, now looking at the momentum that we saw in last 2 years, in terms of equity participation, which has gone up. Now the volatility has taken over. Now for all the new investors who were really seeing a lot of gains in their portfolio, somewhere down the line they might just lose confidence if they are not aware of the market conditions and how the market pans out. I want to understand from you, what would you want to say to those kind of investors who are maybe coming into the market for the first time, witnessing volatility and these kind of economic concerns globally? Any losing steam in the momentum? Do you see it happening?
Yeah, I think the most cautious sign, if I may tell you, is the rise in futures and options turnovers, which have happened over last 12-month period, and which is bit unnerving, I would say, because large part of that participation is through retail investor. And one thing one should keep in mind that India or any market is not like a casino market where every day you put money and take bigger risk than what you can chew, and you make money on an everyday basis. There can be setbacks, and setbacks can be pretty big, and which can wipe out your portfolio if you go wrong in any of these derivative positions, which are like very highly leveraged positions. So my advice would be, if you know that market well, then fine. But if you are just participating because others are also participating, it is more of a herd mentality, then I would want you to be cautious. And the best way to participate from a long term trajectory is through mutual funds. And I think one should have that discipline of investing into long term wealth creation products as compared to near term products. Long term will create wealth for you, short term will create money for you.
One last question to you: your outlook on gold and real estate.
Tough to say. We are not expert on that, but the way, as I said, global backdrop is looking like, gold should do well. Real estate, I would say, it is more of a more difficult market to understand. But general sense, what we get is demand is strong. Land prices, at least in certain states, are going up, which generally is good for the economy.
All right, Jinesh, thank you so much for being a part of this interaction
Thank
and
you.
helping
Thank you.
our viewers today. Thank you so
Thank you.
much.
Thank you. Bye. See you.